Yeah, the Fed is obviously very important. Right now, investors are very optimistic because they're thinking the Fed's about to cut rates, and you've seen risk assets really rally into it. So obviously, the Fed is always important to investors, but right now is particularly important because you've got a kerfuffle going on where President Trump is trying to remove one of the Fed governors over a purported cause event. That governor has obviously disagreed with that assessment and now is suing both the president and the Fed itself. The reason that's a potential problem is that if investors were to start worrying about the Fed's independence, you could potentially see some impacts on the markets. Sort of like in 1987 when you saw bond vigilantes eventually push up long rates and that eventually led to a crash in the US stock market. So it's something that we're certainly watching. We think investors are not paying enough attention to it. One of the things I've learned from my many years of watching markets is investors often ignore things until they suddenly don't. And so the thing that we'd be watching is look at the bond market in particular on the long end. If you started to see that gap out, that would be a warning sign. And the other thing to look at is the US dollar, and if the US dollar is starting to impact. If investors really lost confidence in the independence of the Fed, that would have dramatic implications for investors. And so we think it's something people aren't paying enough attention to right now, and it's certainly something we're watching.